Hey guys, this is Mr. Oxy coming at you live from Palm Beach in Florida. It is the last day of February. It is February the 28th. It is approximately 1:30 in the afternoon, Eastern Standard Time. I have worked my way through the Occidental 8K filing, which is the annual filing for last year. So this video is going to be incredibly boring, and I'm probably going to lose most of you right at the start. But for those of you who are interested, the good news is that the 8K filing, which is what is it, about 350 pages? Yeah, 350 pages. What I've done is I've done a little breakdown. It kind of looks like so. So I basically highlighted the things that I want to share with you. The other good news is, so firstly, you're not going to have to listen to me for 350 pages, however long that would take. But in addition to that, the other good news is, as I work my way kind of through the filing, I didn't particularly see anything that is of concern. And if there's anything that that sort of caught my attention, I will share it with you. But I'm going to go through this as quickly as I can. I have about 18 headers. The last bits include some things related to the preferred stock and the Black-Scholes calculations as it relates to the algorithm that you use for calculating the warrants. And then Oxy's breakdown of sales. So many of these things that I'm going to cover are questions that people ask of me on a regular basis. So let's see if we can work our way through this. And the really good news is, just to make it really simple, we're going to start on page 19, I think. So let's see if we go over here. So, okay, so what I'm going to do is I've got a few headers, right? So point number one is Anadarko Tronox or Tronox settlement, right? So these are things that I'm now taking from the 10 or 8K filings and I'm sharing with you. So this is Occidental's report to the SEC. So it's got nothing to do with my opinion. It's just a matter of fact as it's reported to the Securities and Exchange Commission. Anadarko's Tronox or Tronox, I'm not sure how to say it, settlement may not be deductible for income tax purposes. Occidental may be required to repay tax. The tax refund that Anadarko received in 2016 related to the deduction of the Tronox settlement payment, which may have a material adverse effect on Occidental's results of operations, liquidity, and financial condition. How much, Mr. Oxy? So right here at the bottom, if the payment is ultimately determined not to be deductible, Occidental would be required to repay the tentative refund received plus interest totaling approximately 1.3 billion as of September 31st, 2021. Now, the good news on this one is, even though this is kind of a little bit of a curveball I wasn't aware of before, this could have a material adverse effect on our liquidity and consolidated balance sheets, but Occidental's consolidated financial statements include, in other words, already includes an uncertain tax position for the approximate repayment of $1 billion, 1 billion federal and 27 million in state taxes. So in other words, they've made allocation for it in the event that they have to pay it. Now, of course, if they get lucky and they do not have to pay it, then it kind of falls away and you almost get a $1 billion windfall. So, let's see what happens with that one, because obviously I don't know. Let me skip to page 21. I did say I'm going to go through this quickly, so I've only been with you for a couple of minutes and I'm already on page 21. And don't worry, I'm not going to go to page 350 anyway. Let's take a look at this one quickly. Share repurchase activities. So what we can see from the filing here is that Oxy has actually been repurchasing shares at a rate of 148,000 shares per quarter, first quarter, second quarter, etc. Anyway, which is under their previous repurchase program. So the additional $3 billion that they set aside for a repurchase program would be in addition to this, unless one plan replaces the other. I'm not absolutely sure on that, but their share repurchase activities for the year ended December 31st, 2021 were as follows. Anyway, they were buying approximately 148,000 shares every quarter under the previously announced buyback program, which was announced in 2005. And of course, we have the new program coming up right now. Let's go to page 22. The very next one shows a performance graph. Here we can see the peer review comparison. So sometimes people ask me, if you are going to do a peer review, who are the peer group that you want to compare yourself to. Occidental, according to Occidental themselves, their peer group consists of BP, Chevron, ConocoPhillips, EOG Resources, ExxonMobil, Shell, Total Energies, and then comparing themselves to the rest of the group. We can also see in the SEC filing, they compare themselves to the SEC, to the S&P 500 and to their peer group. So you can see Occidental has been underperforming the peer group. And in addition to that, Occidental significantly underperformed the SEC over a period of approximately 5 years. One of the reasons why this picture looks so incredibly bad is because of the period overlapping the Anadarko acquisition and then the subsequent crash related to the COVID pandemic obviously impacted some of these stocks more than others, but the S&P 500 would have been a good place to park cash if you were risk averse and you just wanted to invest in something that was probably going to generate some a good return for you overall from a general point of view. Let's go to page 24. Current business outlook and strategy. Under general here, there's a line that says current uncertainty of whether oil supply will be able to sustain a continued supply response, as well as geopolitical risks, have resulted in a significant increase to benchmark oil prices. Now, we know that already. And of course, right now we have the additional conflict that's going on in Russia and the Ukraine. In fact, what I'd like to do is put a request out to any of you. I'm not sure, obviously, where you are all located, but if anyone is actually in that sort of greater region of the Ukraine, Russia, etc., would you be so kind as to comment and perhaps tell us what's going on? Because the fake media is going all crazy, sending us pictures of war damage and people getting injured, and some of those pictures date back to 2018, 2016, etc. So they're using stock photos to tell us how bad the war is. I'm not implying that there's nothing going on. I'm just saying, can I get some real news? So if you are in the region or in that close proximity to that region, even if you're in countries like Serbia or Belarus or something like that, give us some first-hand information, please, even if it's not related to energy. Just tell us what's going on. Anyway, we know there's a lot of stuff going on that's impacting them. How about the debt and interest rate swaps? In 2021, Occidental reduced total borrowings at face value of over $6.7 billion. We know about that, and retired interest rate swaps with a notional value of $750 million. As of December 31st, Occidental had debt maturities of approximately $101 million. It's not material. $465 million in 2023, etc. $1.7 billion in 2024. In January 2022, Occidental paid off the last of its 2022 maturities for $101 million. They're in a very good situation in terms of their interest rate swaps and long-term borrowing. When you look at this picture over here, they've really done a good job in terms of repairing the balance sheet. As of December 31st, 2021, all Occidental's Brent price sold calls and two-way natural gas collars have expired, which also brings about some cost savings for Occidental. Debt ratings. Occidental's non-investment grade debt rating may require Occidental to provide financial assurance in the form of cash, letters of credit, surety bonds, or other acceptable support under certain contractual arrangements. Anytime you have to provide people with things like letters of credit or whatever the case might be, these cost money. You have to pay for them in addition to whatever the cost is for servicing the debt or whatever it is that you are busy doing. Let's go to page, at the bottom here, liquidity. Occidental exited 2021 with cash and cash equivalents of almost $3 billion and total borrowing at face value of $28.5 billion. So that number is coming down quite nicely. So that's page 25. Let's go to page 27. Over here, we have the oil and gas price environment. So you can see the averages, and this is something that's worth noting, right? So when you see, for instance, the current futures price for WTI is $95, $96 a barrel or something like that. Remember that that's the futures price, and it might be in relation to the April futures date, right? It's not the price that it is today. So if you look at the actual averages that Occidental is reporting, you can see the huge swing positively or in their favor in terms of oil prices is one of the reasons why we have such fantastic quarters over the last couple of quarters, and the next one's going to be even better. Oil and gas prices are major variables that drive the industry's financial performance. The following table presents the average WTI, that's West Texas Intermediate, and Brent crude prices for oil, and New York Mercantile Exchange natural gas prices for 2021 and 2020. So if you look at WTI as an example, because that's where Oxy generates most of its revenue from, for the year, fiscal year 2020, the average was only $39, which is approximately Occidental's break-even point. So there's no money in that. But now it's almost at $70. So nearly 2 times that amount for 2021. And currently, obviously, we have the price sort of in the $80, $90 range with the current contracts that were sold. So remember, we're at the end of February, so some of these contracts were executed in December. So the price that they were sold at were, in the high 70s, early 80s or whatever. And the current price, as I said a minute ago, that we are at now at nearly $100 a barrel is the futures price for April contracts or sales. Worldwide oil as a percentage of average WTI, 97% for 2021, just a slight uptick there from 2020. We're on my page 27. So now I'm going to skip all the way to page 39. So let me just go there. What was here? Net sales. So sometimes people say, what is the breakdown of Oxy's revenue in terms of WTI or crude in comparison to OxyChem or chemicals and midstream marketing, natural gas, etc. What is the breakdown? So if you're interested in that's one, and if that's one of the questions that you ask me, there are different ways to break this down, because you could break down the, you could do a sales breakdown by commodity, or otherwise you could do it by geography. So there are many ways to, slice and dice that one depending on what it is that you're actually looking for. But this gives you an idea, right? So net sales, oil and gas. So here they've lumped them together, almost 19 billion, and then chemical about 5, and then midstream and marketing about 3. So you can do the math on that one. If you say total, 26 billion, almost all of it, certainly by far the greater majority of it, is oil and gas. Net income for the year, 2.3 billion, pretty good. Previous year was negative, almost 15 billion. So a huge swing, a huge turnaround, right? That relates back to the comment that I just made, where the average WTI price for 2020 was about $39, which is almost equal to Occidental's break-even point, which means that there's no money to be made in that type of an environment. And that's how they ran up that loss for 2020 compared to the profit for 2021. Things are looking good and they are getting better. On the very next page, page 40, this is the segment. So domestic, international, etc. That's what I was just talking about in terms of how you might want to break it down or split up the revenue as it meets your requirement when you're doing your due diligence to find out whether this is investable or not. Obviously, I don't know what you're looking for. I'm just reporting, and you make the decisions. So here's an interesting one, right? It is quite material. Legal entity reorganization. There's one of these accounting things, which is really, really cool, because you can use it to your benefit as long as you stay within the parallel lines of what is considered legal. Accordingly, in the first quarter of 2022, Occidental will record a one-time non-cash tax benefit. Stay with me here, guys. In the first quarter of 2022, that's where we are right now. This is going to be the next quarter that's going to be reported. Occidental will record a one-time non-cash tax benefit that is currently estimated not to exceed 2.6 billion in connection with the reorganization. What is the reorganization? Well, in order to align Occidental's legal entity structure with the nature of its business activities, and after completing the acquisition of Anadarko and subsequent large-scale post-acquisition divestiture program, management has undertaken a legal entity reorganization that is expected to be completed in the first quarter of 2022. Let me explain this one briefly like this. If I have a company and I split the company into 2 companies, and especially if the companies could be in different tax jurisdictions. So let's say, for instance, I have a company and I split the company into 2, and half of my company is going to be reporting to a different tax jurisdiction altogether. Let's say, for instance, Saudi Arabia. And the other half of my company, assuming they're 50-50, is going to be reporting in the United States. I now have the ability not only to divide up my assets, but I can also divide up my operational costs. And I can have transfer costs that I can, if one of my entities is profitable and the other one is kind of marginally profitable or running at a loss, I can transfer costs from one to the other and do that for for tax benefit purposes and save myself some tax money. So Oxy has gone through a legal entity reorganization, which looks to be recorded as a non-cash tax benefit, non-tax cash tax benefit. So non-cash would be something like depreciation as an expense. This is the other way around. This is non-cash, and it's a tax benefit, not to exceed $2.6 billion. In other words, it's the opposite of an impairment charge where you're writing down the value of an asset. You're actually, in this particular instance, increasing the value of one of the assets. Page 46, cash on hand. Oxy at the end of the financial year 2021 had approximately $3 billion of cash and cash equivalents, right? So cash and cash equivalents is what we look at when we look at the quick ratio. How much cash and cash equivalents do you have? $3 billion. And how does that match up to your current expenses that are going to be due within the next 30 days? That's the quick ratio. The current ratio takes all your current assets and compares it to all your current liabilities. And we want that ratio to be 1 or better. The majority of Occidental's cash is held and available for use in the United States. In some of the jurisdictions where Occidental does business, they are subject to some serious currency fluctuations and devaluations. So having it in US dollars, regardless of the fact that the US dollars is fiat money and it's declining and depreciating commensurate with how fast the government prints money, it's still okay rather to have it in US dollars than to have it in, I don't know, some foreign countries' currency, whatever it might be called or whatever it is, with no disrespect to anyone else. 47, on balance sheet. So we have the long-term debt. The long-term debt note, 28 billion on this year, and you can kind of see how the number has changed over the years, over the past few years. Expected interest payments, and this is a critical piece as well, because if Oxy can achieve investment grade, then the interest rate payments will automatically be decreased also. Now I'm going to skip forward here to page 64, and the good news is I am more than halfway through what I want to share with you. So I talked about this just a minute ago. So we're talking about the quick ratio, which is cash and cash equivalents compared to current liabilities, which is bills that are going to be due within the next 30 days. And then if you look at current assets, $10 billion, we can compare that to current liabilities, and that's called the current ratio. So the quick ratio is cash compared to accounts that have to be paid pretty soon within the next 30 days. And the current ratio is all the current assets compared to all the current liabilities. We always want the current assets to be at least equal, like 1 to 1 or greater than 1 when you compare it to the current liabilities. So remember these numbers if you can. So approximately $2.8 billion current assets in cash and cash equivalents, and approximately $10 billion in current assets in total. Because we can see the total assets 75 billion. And if we scroll, I think just to the next page, let me just go to 64, actually. Okay, I will take a quick look here. So accounts payable, 3.8 billion. So Oxy needs to get some cash from their receivables in the cash register in order to pay their accounts payable. But they don't actually designate whether these are short-term accounts payable or longer-term. We don't know. So we don't know if they're due within the next 30 days or not. Anyway, the total current liabilities is 8.3 billion. And if I go back up, the total current assets is 10 billion. So you have a 10 to 8 ratio, which is greater than 1, which means it's in Occidental's favor, which means Oxy is in a pretty good position right now. And here you can see the total debt right now is sitting just under 30 billion. We want to get it down to 25, maybe even down to about 20 or so. Now I'm going to go to page 76. And by the way, I'm not even going to page 350. I'm going to wrap it up at about page 130, but I'm skipping pages as I go. I want to talk a little bit about here on page 76. I want to talk a little bit about stock-based incentive plans. I mention these from time to time, and you know, some people pay attention to this and others do not, but it's important to note that Occidental has a very good and very sophisticated incentive program as it relates to stock as a part of executive compensation. So what that means in simple terms is if my salary, for example, as CEO of the company is $1 million, just to use a round number, my actual cash compensation might be, for example, say $200,000. And the rest, in other words, the other $800,000 I can earn in stock, but I can only earn it in stock based on certain parameters, benchmarks, criteria, or whatever that might be set in the compensation plan before me. Typically, what happens in that instance is executives can earn a variety of different stock awards. In other words, these are awards that are granted to them. It's not like a savings plan or just buying stock on the market. They earn it as part of their compensation, but it needs to be awarded to them. The most common example of that is a stock option, where you are awarded some stock. But then what happens is you could say you can have a restricted stock plan, and you can have restricted stock awards, you can have restricted stock units, and you can always also make them performance-based. So you can say, if Occidental stock, for example, increases by 10%, then you can earn these restricted stock awards. So now I've added a performance related criteria to the award. I hope that makes sense. Anyway, for cash and stock settled restricted stock units, RSUs, sometimes they are RSAs, which are restricted stock awards, and cash return on capital employed. Awards compensation value is initially measured on the grant date using the quoted market price of Occidental's common stock and estimated payout for the grant date. The fair value of stock options is estimated using the Black-Scholes model. Long ago, probably about maybe 18 months or 2 years ago, I actually made a short little video on the Black-Scholes model, and I actually had a CPA, chartered professional accountant, comment on that and said, we do not use warrants, the Black-Scholes algorithm to calculate the value of warrants or awards or whatever. We certainly use it for stock options. And at that point in time, Oxy had not yet issued their warrants. I didn't know what algorithm they were going to use to evaluate or value the warrants. So I just assumed it'd be Black-Scholes. But if you wanted to see or look at the Black-Scholes model, I made a video on that some time back. So you'll find it in the library, or if you want to see it, ask me for a link and I'll post it to the comments. For total shareholder return, awards compensation value is initially measured on the grant date using the fair value derived from the Monte Carlo valuation model. Now, the Monte Carlo model is a little bit more obscure than Black-Scholes, which is the most common valuation model used for valuing stock option awards or related type awards. Monte Carlo is a little bit different. You get some highly specialized and highly qualified people. For instance, in the United States, I know there's like a consulting firm like Aon Consulting, AON, and they got some really skilled pros who are very familiar and up to date with the Monte Carlo algorithm as a methodology to value stocks. So stock awards, sorry. So let me go to page 81. And I don't remember what's on page 81. It's about WES and preferred. So let's take a quick look here. WES, Occidental still owns 51.8, so 52% of WES. So you can look up WES, which is also publicly traded. You can see sort of how that's going. In March 2021, Occidental sold 11.5 million limited partner units for proceeds of approximately $200 million, resulting in a gain of $102 million. So they almost doubled their money there. But why is that significant? Well, they sold approximately 11.5 million limited partner units for $200 million in that particular quarter. Why? Because they have to pay, Occidental has to pay Berkshire Hathaway a $200 million a quarter coupon. So in this particular instance, they paid the $200 million coupon to Berkshire Hathaway, with $200 million generated from the sale of some limited partner units of WES, but it had a gain of $102 million. So effectively, they were able to settle the $200 million coupon to Warren Buffett or to Berkshire Hathaway at a cost of only $100 million, because they sold some stock that had a built-in gain. Of course, it's pre-tax gain, so what I'm saying is not absolutely correct or true, but that's kind of gives you an idea of how you can arrange this to best suit yourself. Page 86, I'm nearly done. Long-term debt. Well, if we look at 2022, and this is a really good picture, right? So we exited 2021 with senior notes due in 2022. So these are the notes that were due in 2021, nothing, right? And then of the 2.7% senior notes that were due in 22, it's been paid or settled, or that was one of those swaps that they did. The 3.125%, same thing, and the 2.6% senior notes due in 2022 only 101 million, which is not material. It's almost nothing. And the last one on 2022, 1.73% as of December 31, 2020, nothing due. In other words, in terms of senior notes, Occidental is almost literally free and clear as we see it today. Let's go to page 94. Got about another 3 or 4 notes I'm going to share with you, and then I'm done. If I go to page 94, talking about the Berkshire warrants. So I just talked about the coupon, but look at this one. The warrants for 80 million shares of Occidental stock with an initial exercise price of $62.50. If you own Occidental warrants, aren't you just happy to have warrants that you can exercise that have an exercise price of $22 a share, right? That's a pretty good deal because Berkshire Hathaway have warrants, which they still hold, which they can exercise when Oxy hits $62.50 or above. So it's like a long-term call option that they have to be able to buy Oxy for $62.50. So, in about a week or so when Oxy is trading for $100 a share, I'm just kidding. Anyway, when Oxy is above $62.50, Berkshire Hathaway have the ability to exercise that call option and buy the stock for $62.50. So even though it's out of the money right now, with Oxy trading at about $40 or thereabout, Occidental expects, and we as investors expect Oxy to exceed that price in the near future. These were issued in connection with the financing of the acquisition. That's Anadarko. They called the Berkshire warrants. The warrants are exercisable at the holder's option. Of course, you don't want to exercise them today because you can just buy Occidental on the common on the market for $42. So there's no particular gain or reason or purpose why you would want to exercise your warrants for $62.50 when you can buy the stock for less on the stock market. Following inputs were used in the Black-Scholes. There it is again. So the Black-Scholes option model, the expected life. So basically, this is giving you a summary of how you calculate the intrinsic value of, in this case, a warrant or a stock option or something like that using Black-Scholes. You need a few parameters. The expected life of the warrants, the volatility factor, the exercise price. The expected life is based on the estimated term of the warrants. The volatility factor is based on the historical volatilities of Occidental's common stock, and the initial exercise price is $62.50. When you use an algorithm like Black-Scholes, there are certain things that you know, like for instance, the date, the exercise price, etc. And there are certain things that you don't know, like for instance, the volatility, the expected life or whatever, where you can actually just go, even using online calculators, you can look it up. You can try that if you want. You could say, what is the volatility of Occidental stock? And you'll actually get a number, and then you can plug that number into the Black-Scholes algorithm if you wish to do so. Just 3 more things. So I'm going to go to page 108. We're looking at stockholders' equity. And what have I got here? Preferred stock and common stock warrants. So let's talk a little bit about this. The preferred stock, Occidental issued 100,000 shares of Series A preferred stock, having a face value of $100,000 per share. Now, we know about that one because that's Warren Buffett's or Berkshire Hathaway's $10 billion financing of Anadarko. But let's look at this one, the common stock warrants. In June 26, 2020, the board of directors declared a distribution of warrants to Occidental holders of common stock at a rate of 0.125, which means one warrant for every 8 shares that you hold. And the common stock warrants have an exercise price of $22. I just talked about that when I said Berkshire Hathaway still has warrants available that they hold for $62.50 per share. And these are only going to expire on August the 3rd, 2027. So wherever you are, whatever you're doing, you're going to be in the money if you have warrants. So the warrants are a really good investment. It's actually been an exceptionally good investment. So good that some of our people in our community, like Kevin Zoe, flipped all his common into warrants. I did not do that. I'm long Oxy, and I'm okay to be long Oxy. I also like the fact that I currently get a dividend, which has been increased slightly, even though declaring the dividend is somewhat dubious or interesting when they could, for instance, pay off more debt first. But I think at the current prices that we are trading at, they can do all 3. They can increase the dividend, they can pay off more debt, and achieve investment grade. So I think we're in a good spot. The common stock warrants were measured at the fair value on the declaration date using the Black-Scholes option model. So earlier on, I said I made this video on the Black-Scholes algorithm, and An accountant actually responded to my video in the comments and said, we do not use Black-Scholes algorithms to calculate warrants. Well, it appears that they do. 2 years ago or so when I made that video, I didn't even know that. But, and I thought, well, too bad. I made a video about the wrong algorithm. But it seems like in hindsight, I was accidentally correct. The warrants, by the way, are classified as equity in additional paid in capital. So if you're looking for the warrants on the balance sheet, then you need to look for the line that says additional paid in capital. Two more, and then I'm going to wrap it up. If you're still with me, you're either very interested in Occidental, or otherwise you don't mind being bored listening to me droning on about whatever it is that I'm talking about. Stock options. These options have a grant date fair value of $12.72 as estimated by the Black-Scholes model. There it is again. So what is this here? This is the actual breakdown of the Black-Scholes model: the risk-free interest rate, the volatility factor, the expected life in years, the dividend yield, and the grant date fair value of the underlying common stock. As I said, there are some of these things you know, like the expected life, the dividend yield, and there's some of the things that you don't know, like what is the risk-free interest rate? It's 0.7%. And what is the volatility factor? It's 55%. Those are things you can actually look up. And if you have a Bloomberg terminal, you can find the answer to that really, really quickly. One more. So just one more point, one more bullet point, and then I'm going to end this video. So let's go to page 130. This is my last comment. This is sales per day by products of ongoing operations. And the reason why I wanted to highlight this one is because it's actually kind of interesting, right? So what you have here is this is showing you that in the United States, and it's by region as well, but in the United States, oil from the Permian, and they give you a breakdown, you know, across the different areas where they're generating or producing oil. Permian, their biggest geography, right? Their biggest piece of real estate where they are producing from. 2021, 286 million barrels per day. And the year prior, 243. So the production, look at the numbers, actually slightly lower, except for the Gulf of Mexico, which is about 10% higher. It was 109 million barrels per day in 2020. It went up to 119 in 2021. What you have here is actually sort of a bit of a pullback or restriction on production, which also, in a way, is what's causing the bit of supply crunch, which as the demand recovers post-pandemic, we have a situation where the producers are actually producing less. And because they are producing less, or at least just maintaining production as it was before, you have supply, which is actually somewhat restricted. Even OPEC and OPEC Plus is not producing as much as what they did before. But the demand is increasing literally every single day, which is helping to drive the price of oil higher. And the price of oil going higher is what is driving the price of everything else higher. Therefore, we are in a hyperinflationary climate, which is not good for anybody. What I want to do here is just wrap it up and say that's an overview of Occidental's 2021 filing. The next thing I'm going to do as an energy investor, and specifically from an Occidental point of view, is maybe take a look at the conference call and go through the slides. If there's nothing to report that I haven't reported on in this particular video, I'm not going to make a follow-up. If there's anything from the conference call that I think is worth sharing, I might make a short follow-up to this just to fill you in on those details as or when or if they are available. But the fact of the matter is, regardless of what Occidental is doing and what the price is doing, we are in a hyperinflationary climate. It's not transitory as the Fed says it is. It is absolutely not transitory. It's going to be with us for quite some time. And everything you touch, feel, consume, eat is going to cost you more money. So the only way that you can hedge against that really is to be an astute investor, to do your due diligence and make sure that you safeguard yourself, not only to protect your wealth, but also in order to be able to get to the other side of this inflationary period with a nice boost to your investment account as a hedge to things costing you more. So guys, on that note, this is Mr. Oxy wrapping it up. And as I said at the beginning, if you're in the sort of greater Russia, Ukraine region, if you're located somewhere there, Please comment or give us some updates on the channel and tell us what's actually happening there from a more first-hand point of view, because the media is just all over the map, and I'm not confident that I want to believe everything they tell us. As usual, if you like my videos, please subscribe. I will see you guys soon with more. Bye-bye.